Good afternoon, everyone, and welcome to the 35th Annual Small Farm Conference. My name is Beatriz, and I am with Community Alliance with Family Farmers. And if you're here for Understanding Farm Insurance Options Workshop, then you're in the right place. If not, please stay here with us. I see we have a good amount of you showing up to this workshop, which is wonderful. Thank you so much for being here in the middle of the afternoon on a Sunday. We really appreciate that. Thank you, Catherine, so much for making this workshop happen and for hosting this space for us. And thank you so much to our sponsors for making this overall conference happen. Now, before this all gets rolling, I want to let everyone know that there is a Q&A function on the Zoom webinar, and there's a chat. If we can please keep all the questions for Catherine on the chat, and on the Q&A, and use the chat to introduce yourselves, tell us where you're from, where you're at, how's the weather down there. I know that we're all experiencing severe weather around California, but yes, use the Q&A to ask any questions, and that is the best way for Catherine to find them later on and respond to them in a timely manner. I also want to remind everyone this is being recorded, and to please keep the chat friendly, kind, and no soliciting allowed. And lastly, for housekeeping, at the end of this webinar, there'll be a survey, and we would love for everyone to share any thoughts that you have on the overall conference, if you've been to a few, and your thoughts really help us for next year. All right, without any more reminders, Catherine, please take it away.
Okay. Okay, can you see that okay?
Yes, we see it.
Okay, so what I'm going to share with you today is we're going to sort of hone in on the micro farm pilot policy, which is a part of the whole farm policy. And so my name is Catherine Anderson. I've been with the risk management agency for almost 18 years now. I'm a specialist, and I'm located in the Davis regional office. Let's see, I'm trying to see. I'm having, it's not, let's see. Okay,
Yep,
maybe
there you go. You got your next one, yes.
Oh, I got to go there. Okay, I was using it from my computer. So let me explain a little bit. Let's see, I think I missed a slide here. There we go. So what we do is we administer the federal crop insurance program in the Davis region, and we serve the states of Arizona, California, Hawaii, Nevada, and Utah. And our goal is to help farmers choose effective risk management tools to achieve financial stability, which is especially important with the current weather issues we got going. So let me explain how this works. So crop insurance has a unique delivery system through the public-private partnership. The public side, being the government through RMA, is responsible for developing, maintaining federal crop insurance policies, and this includes determining the rates, the prices, and the yields for each crop at the county level each year. RMA is also in charge of compliance to prevent fraud and abuse. So what happens is independent crop insurance agents sell the policies to farmers under approved insurance companies that underwrite the policies and settle the claims if there's loss. And then the federal government subsidizes the premiums to reduce the cost of crop insurance for farmers and reinsures the private insurance companies to share the cost of the claims. If multiple peril crop insurance was sold only in the private sector, it would likely not be affordable. So in brief, RMA manages the Crop Insurance Corporation to provide crop insurance products to America's farmers and ranchers. Approved insurance providers, that we call AIPs, sell and service the crop insurance policy through public-private partnerships. So why have federal crop insurance? You know, is it really something you need? So in many cases, you know, some of the things that it does is it may help you stay in business after a severe weather event, lower production year, or low prices. It provides some financial stability and may improve access to credit. An example I could give you was in 2015, as some of you remember, in the month of December, it suddenly became summer in California. And what happened is down in Kern County and all over, the pistachios started blooming as if it was summertime. And then a few weeks later, it went back to winter. And so we had 100% loss on pistachios that year. And I went down to do a large claim to oversee not do it, but to oversee a large claim. And the pistachio grower had MPCI policy for pistachios, but then also had a whole farm policy. And we don't double dip. So what they made with one gets counted, against the other. But the grower clearly said, if it wasn't for you, I would have been completely under. And then last week, one of my coworkers was at the World Ag Conference down in, I think, Ventura. And she said she had a grower come up to her and he had tears in his eyes when he said, if it wasn't for having crop insurance, he said, I've never had crop insurance, but this last year I did. And he had, I believe, avocados and blueberries. And due to weather issues, he says, I had a complete loss and I would have lost my farm without crop insurance. So it's there to help you. It's not there to help you make money, but to help you so you don't go completely under and you can keep farming. So it can make a difference between going out of business after a disaster. Let's see. So what are the insurable crops in California? So the most common insurance programs that we have is called MPCI, which is multi-peril crop insurance, and that's based on your production. And then we have another one that's revenue protection, and that's revenue based. So in California, we have about 60 plus crops available for insurance in California. But crops that are not listed above can be insured through our whole farm revenue protection or micro farm policies, which are both a revenue product. But all of those, as you can see, are what we insure as a MPCI or revenue-based crop as of right now. And yearly, we're always trying to add on other crops as the need arises. So if there's crops in your area and you're going, well, you don't have an MPCI policy, I wish you did, talk to us, talk to an agent, and let's see if that's something that can happen. It takes a while, but it's better than nothing. So let me give you a little bit of history. Whole farm revenue protection was first offered in 2015, and it replaced a program called AGR and AGR Lite, adjusted gross revenue. Then 7 years later, in 2022, microfarm was introduced as a streamlined approach to whole farm, specifically for small producers. So both policies, so as I go through this, I'm going to be explaining what are the similarities between both policies and some of the differences. So both policies are designed to cover the gap for crops that don't have an MPCI policy, are revenue policies that cover all crops on the farm. You can't pick and choose which crops to cover, and they rely on the Schedule F tax records to determine revenue and losses. If you don't have a Schedule F, a substitute Schedule F can always be made. And whole farm and micro are available in all states and counties in the United States. And that's the only program that we have that is like that. So let me first talk to you about whole farm. So whole farm, since that's kind of the parent program, whole farm covers up to 17 million of revenue. Post-production costs are not included. Expected values are primarily based on third-party sources. And what that means is you can't say my crop is worth such and such without having a third party back up the value of your crop. Expected yields are based on underlying policies or an insured's 4-year average. So if we have, let's say you decide to do whole farm with almonds, we have other policy, we have an almond policy. So we'll be looking at that data as well to to determine what your expected yields are. You may purchase additional individual crop policies. So like I said, I had the grower that had pistachios. So she had an MPCI policy, but then she also had a whole farm. And having the two actually saved her from a complete loss. But when you do that, it must be at buy-up coverage levels. And any indemnities from these policies will count as revenue earned under whole farm. So you don't get to double dip, but it does make a difference. So microfarm, though, the difference between those is that microfarm is less paperwork requirements. In insured farm operations with approved revenues up to $350,000 for the first initial year of insurance and $400,000 for carryover policies. And so that was the main difference because, as you know, the other one was 17 million. So this is really geared towards the smaller farmer or the startup farmer. Well, a farmer who's had business for about 3 years. So it's the smaller farmer. And I'll get into that more later. Post-production and value-added costs may be included in the improved revenue. And expected value and yields are based on the insured's past 3-year average of total revenues in acres. But with microfarm, you cannot have any individual crop policies allowed, any of the MPCI policies as you do with whole farm. So what does whole farm and microfarm both cover? So they cover all the revenue from all commodities produced on the farm, including industrial hemp, animal and animal products, commodities purchased for resale up to 50% of total, but it does exclude timber, forest products, and animals for sports, show, or pets. It does cover replant costs, which is available for whole farm with approval, but it's not available. Replant costs are not available under microfarm. So whole farm and microfarm coverage options. So we have flexible coverage levels tailored to your need. And they're in 5% increments going from 50% to 85%. And then we have a diversification of 3 commodities, which we call our commodity account. And that's required for if you want to get 80% or 85% coverage level for whole farm. So what that means is that if you have 3 different commodities on your farm, then you can get the higher 80 to 85% coverage level, and you get a discount. Whereas with microfarm, you automatically qualifies for the 80 to 85% coverage level. And on both of these, you are not allowed to get what we call CAT coverage, which is catastrophic level is not available. So, wait a minute. Oops, I think I went back. Hold on. There we go. So what causes a loss for payment for whole farm or micro? So that would be a natural cause of loss and decline in market price during the insurance period. And it could include adverse weather conditions, fire, earthquake, insect or plant diseases, but not damage due to insufficient or improper application of pest control or disease control measures. Failure of irrigation water supply if caused by an insured peril that occurs during the insurance period. Wildlife, unless control measures have not been taken, or in accordance with subsection D and E, a decline in the market price. So taxes must be filed for the policy year before any claim can be made. When revenue to account for the policy year is lower than insured revenue, a loss payment will be made. So what happens, and this is where the difference between an MPCI policy and whole farm is An MPCI policy, that you got that for an insured crop, it's based on your production. So when you have a loss and you file your claim, you're going to get paid pretty much timely, not, pretty close to not too long after you have your loss and everything's been processed. But with whole farm and micro, it's based on your tax records. So the example I can give you is if you had micro or whole farm right now, and due to this current weather that we had in January with all the rains and you had a loss, it would not be covered. You would not see your payment until you've filed your tax returns for that period. And that could be like a year away. And so that can be kind of, disheartening for most growers, because you've had a loss and now you have to wait for payment when you get your taxes done. Now, there is one option out there for you, just so you know about it, is that California Farm Link has bridge to loan, bridge to loans. So what they can do is, if they know that you have, and if you qualify, that if you have crop insurance and they can verify it and that you're going to be getting a payout, they can always give you, you can apply to get sort of a short-term loan to cover you to keep going until you get your taxes filed. So that's the downside, I guess you would say, of whole farm, is because it is based on your tax records. And depending on when you file, that's when you're going to see your payment after that, since it's a revenue-based program. So what is micro farm? So we talked a little bit about whole farm and how much it covers, and so just in a little bit more detail. It's a streamlined, more accessible version of whole farm. We call it WFRP, or whole farm, and ensures farm operations with approved revenue up to $350K, like I said before, or $400K for carryover policies. And an example of post-production and value added costs could be jams, jellies, or pies made from fruit produced in the operation. Expected values and yields are based on the insured's past 3 average of total revenues in acres. So microfarm reduces the paperwork, as the expected value and yields are based on a 3-year average. So one of the main differences between the two is that whole farm requires expected values and yields for each commodity, whereas microfarm just uses the average. So they tried to streamline it to make it much easier for the smaller farmer or grower. And so microfarm is offered through whole farm and is available to producers who have, I think I pretty much said that, but 350 less, 400 for carryover. If revenue exceeds the limits stated above, it will be capped at those limits, and all revenue will be considered revenue to count. The $350,000 limit captures 85% of local food producers. So that's how they sort of came up with the numbers that they did and the amounts that they did when they created this program. To have a carryover policy, you must have had microfarm coverage the previous year. So you can't like have whole farm and then say, I'm going to do a carryover. It has to be another microfarm policy. And there's no carryover, like I said, insured the initial year of the program. So for microfarm, you must have at least 3 years of consecutive tax records. So for 2023, you would require forms from 2020, 2021, and 2022. And that's for calendar and early fiscal filers, and uses a Schedule F or substitute Schedule F. So the downside of microfarm is that if you're a brand new farmer, you're not going to have these records. But it's good for you to be aware of this, so that if this is the route that you want to go, especially since it covers all the crops on a farm, that you start, keeping records, so that 3 years down the road, you would be able to get a microfarm policy. And as I said before, it's available in all states and counties. All coverage levels will be available in 5% increments from 50% to 85. Insureds are not required to report expenses, and individual commodities are not required to have separate expected values or expected yields. So this is ideal for an urban farmer. And consolidated sales records can be used. 3 years of sales records are required. And again, replant payments are not available, and industrial hemp provisions are still applicable. So the benefits is that it minimizes underwriting and record keeping requirements. There's no expense reporting. There's only one commodity code. Producers can include post-production costs, activities, as I said before, such as canning, freezing, processing, and packaging commodities, or value-added products like jam. So the required records is you must provide contemporaneous records that document the sale of commodities sold to determine allowable revenue on the Schedule F. Sales records must provide a total value for the commodities reported on the final farm operation report. So the qualification limits: producers are ineligible if they are vertically integrated, have a commodity that is insured by another policy issued under the Act. So that's for, like I said, for microfarm. If you had another commodity issued under the Act for whole farm, you would be fine, but not for micro. It's not available for expanded operation considerations, and replant payments are not available under micro, but they are possibly under whole farm. So here, these are special circumstances that are in whole farm, but not applicable to micro farm. And so this is where you can sort of see which might serve you better as far as the what they offer. So organic commodity requirements are required in whole farm, but not in micro. Post-production operations and added value, animal and animal production requirements, nursery requirements, marketing contract requirements, expanded operation requirements, and direct commodity requirements. These are all stuff that's required in whole farm, but are not applicable to micro. So they, as you can see, they definitely streamlined what they're requiring under micro. So it's not such a cumbersome policy and burdensome as far as the paperwork that you have to provide. So micro farm and whole farm is available for the 2023 crop year. The sales closing dates are in Arizona and California, it's February 28th. So you got 2 days. Today's the 26th. So if this is something you're interested, you're going to have to talk to an agent immediately. In Hawaii, Nevada, and Utah, it's March 15th. The revised farm operation report is due July 15th, and our contract change date is August 31st. So what is the coverage period? The time during which coverage is available against loss of production of the crop because of an eligible natural disaster. Starts when the crop is planted or within 1 day of approved application for coverage. Ends on harvest completion, established normal harvest date, and abandonment or total destruction of the crop. So one way to think about this is if you know that you have a crop on your farm that's particularly sensitive, let's say at the end of January, you would want a month before, you would want to apply, because there's like a 1 month lag, you would want to apply for crop insurance or whole farm or micro before that time period. So that in case there was a loss, you would be covered. It's not waiting until February 28th and doing it. You have to make sure you have insurance before something happens. Kind of like car insurance. If you can't get car insurance for an accident after it happens, you kind of have to have it before. So that's kind of how I think about some of this, is think about car insurance, and it runs kind of similar. So if you have a loss, you must submit a notice of loss within 72 hours after discovery that revenue for the policy could be below the insured revenue, and inspections might be required. So that's a hard and given. You do need to make your agent aware within 72 hours. So if you're going to, oh, I went backwards, hold on. Oh, so here is if you're going to, if you want more information, you can go to down below. It says www.rmausda.gov, and this is what is going to pop up on the screen. And I wanted to give you sort of a visual of where to go and what it looks like. And this presentation will be available after. I'm going to be sending it back as a PDF, and so that you guys can, if you need that. So let's see. So the tools, you're going to go under to the tools, and we have 3 sections, and one is the agent locator, the actuarial info browser, and the cost estimator. And the actuarial info browser will have the dates of when things are done. It'll also have the list of the commodities if you're going to go with whole farm as opposed to micro, as far as the different commodity that you could get. And then we have the cost estimator. So if you kind of want to get, well, I wonder how much is this going to cost me? Hold on one sec. Just checking my notes to make sure where I'm going. So to find whole farm commodities for a diversification period, you're going to go to where the actual information browser that I showed on the previous slide, and you're going to select your state and county and go to the commodity tab for the list of crops. And there you'll see all the list of crops for that county. Most of the crops are in a lot of the counties, but not all. So there's going to be crops that are going to be in Northern California available that are not in Southern California, because we're trying to base it on what's grown in that area. But that's how you'd be able to get an idea of, are my crops listed? We also, within that commodity list, we have like other. So if you have a crop that's not listed, like you can see here, we have avocado, all other brands. We have avocado Hass, or I don't know how it's explained. Barley, we have irrigated, non-irrigated. So there is an other category for like vegetables, all other, to cover you. So in the cost estimator, so here I brought up just to sort of get an estimate of where you go. And this is how you would sort of fill it out. On the next slide, you'll see actual numbers, but you're going to put the commodity, which is under the whole farm, the calendar year, what kind of filer you are you a beginning rancher or farmer? Does conservation compliance? It doesn't. Expanded operation. You're going to fill all this out, and then you're going to get your estimates. So on the next page, this is the one I think everyone's interested in. So if you had under microfarm, if you had $100,000 in average revenue, and this is for Fresno County, so each county is going to be different, but your liability is $85,000. Your total premium is $13,770, but what you end up paying is only $6,059 per for the revenue for the $85,000 coverage. So that gives you an idea. If you're at 50%, it's $6,400 premium, but you're only paying $1,280. As I explained, that you're subsidized by the federal government. So then here comes the most important part is that it's like, okay, I'm interested, but what am I going to do? Well, you need to find an agent, and we have the agent locator. And what I tell people is, future farmers or farmers is that just so you know, an agent cannot offer you a better price. All the prices are fixed by the federal government. So if an agent is saying, well, I'll give you a better price, that's not true. And you might want to run because doesn't sound good. But what they can do is offer you better service. Everyone, what kind of service can they offer you as far as timeliness, that type of thing. As federal employees, we cannot recommend anyone. So I think the best thing is if you're growing a particular crop in your area, or other growers that are insured, talk to them and find out who their agent is, and then interview the agents and see who's going to be a good fit for you. But this is where you would go to locate an insurance agent, and then it would pull up state and counties, and you could go to them and click on them, and they'll give you a list of names, and then you can decide from there who you want to call and who might be someone that you're interested in representing you. And then here's the resources we have. You can click on these links to get the fact sheets. And again, you can go for agents. We're at the end. Any questions?
Catherine, there is some questions in the Q&A function. Do you want me to?
Yeah, could you read them to me?
Yeah, of course. The first we have is from Wendy, and their question is, will this session be on crop insurance or other types of farm insurance? Was that answered?
We were instructed to really, we talked a little bit about MPCI, and right now the federal government, we're really asking that we really push micro and whole farm because it covers all your crops. And, at the end of the day, I think the other ones are there's quite a few of them that are all production based, but it really comes down to dollars and cents, and it does come down to revenue. So I think they really feel that whole farm and micro is a good fit for pretty much all growers until we come up with more individual crop policies, because when it's all said and done, are you making money or are you losing money? So there's no other, this is what we're covering for today.
Thank you. I think that was made at the very beginning. Also, Michelle asked, does your Schedule F have to be profitable first to get coverage?
No, you just have to prove that you have Schedule Fs.
Okay.
Not necessarily you have to be profitable, but you do have to prove that you have Schedule Fs.
All right, we have another one from same person, and they're asking for wine grapes. If you lose all your grapes in a disaster, does it help cover the lost value of the ultimate product, the wine? We wouldn't be able to have estate wine if we can't get our grapes.
Well, we do have a MPCI policy for grapes. We have one for wine grapes and we have one for table. And within the MPCI policy, we have is split up between, I think, red and, well, I know with the whole farm, we have a split out between red, white, and I think black. And it really does come down to, it's all based on revenue. So it's the ultimate revenue is not split out between the two. So if you end up with a complete loss or a loss of your whole farm, whether it's wine or whether it's grapes or not, that's going to be the impact. That's what you're going to get a payment for.
Awesome. Thank you. And for everyone who's here, I also want to say my coworker Amber is out also providing some real cool links in the chat as we go along. They're also a very resourceful person and they know a lot about the insurance and some of the links that have been mentioned here. So please check that out as we go through this. All right. Another question right up is it says, I see micro farm covers jams, jellies. Does it also include wine? So I guess that was a little bit related to the above one.
Yeah, yeah.
Perfect. And Shelby asked, do you have any advice on acquiring liability insurance? I had a hard time finding as an urban hobby farmer.
You mean when you say liability, you're talking for your actual, other than the crop and that, you're talking for the land and that type of thing? Is that, or you know, I guess I need a little more information when you say
Yeah,
liability.
I allowed Shelby, if you're still here, I allowed you to unmute yourself and if you want to expand on that.
As far as selling any product at market.
Well, it's with either of these policies, it still comes down, when you say liability, what do you mean as far as selling the products at market?
I mean, lawsuit from a customer, something like
No.
that.
No, that would be that would have to be like a personal, you'd have to probably look for some other type of agent that might cover that. We don't cover that.
Appreciate. Thank you, Shelly. And we have another one here. This one's a little long and it's a two-parter. So here we go. Would the micro farm insurance cover damage due to mudslides or downed trees? Does it also cover damage to infrastructure or just the farm crops?
Just the crops.
Thank you. That was easy for you, Kathy. All
Yeah.
right. What is that?
Well, and let me explain something too about both programs. So let's say you have whole farm or even micro, but let's say you have 5 crops, and of the 5 crops, 3 of them were complete loss, but 2 of them just excelled, you know, for whatever reason, they excelled. And so when you add it all together, you don't have a loss. And that's the thing that you need to understand. This is based on your whole farm, not your individual crops. So you could have loss on a couple of your crops, but then your whole farm, but the whole farm as a whole did well, you know, didn't have a loss. And so you're not going to recoup what you lost on the other, you know, on the ones that you actually lost. So that's what makes, this is why it's based on your tax records, you know, the Schedule F9 farm report. And it's looking at the whole farm and not individual crops on both of these. Whereas if you had an MPCI policy, those are looking at the individual crop, you know. So if you had 5 crops on your farm and you had individual MPCI policies and 3 of them took a nosedive, you would get losses, and they're insured. They're actually MPCI policies. You would get paid back on those ones, but not on the other 2. So it's a little, you know, just because you have a loss of one crop doesn't mean you're necessarily going to get any kind of payout or reimbursement. It's based on how your whole farm functions, you know, together.
Okay, awesome. Thank you. And all right, we have, are dried fruits considered a value added?
I think so, but I'm not positive. That's where we really encourage you to talk to an agent, because they'll be able to go into more detail with your operation and figure out where that falls in. But it could be. I just don't know offhand. I've never been asked that question before. I'd have to look it up and get back to you on that.
Thank you. And we have one here. It says, what alternatives are there for micro farms that does not have a 3 years of production? And parentheses, they have almonds, and the catastrophic year of 2022 was supposed to be their first year of real crop.
Well, unfortunately with micro, here's the thing, for those of you that kind of didn't have insurance during the whole 2022, there is nothing you can do after the fact. It's kind of like after a car. All you can do is look forward. You know, what I see happen is once we have a sudden disaster, whether it was fires or the water or whatever, all of a sudden people want crop insurance. Unfortunately, with microfarm, you have to have 3 years of records. With Wholefarm, if you've been if you're a beginning farmer, 10 years or under, you only need 3 years. But if you've been around longer than 10 years, you would need 5 years of records for Wholefarm. To what I work with the BFR group here in California. And one thing we always suggest is that you make sure you get signed up with FSA so that they know, if you're able to know that they have an disaster assistance program that's pretty inexpensive that covers pretty much anything. So that's a sister agency of ours, but you would need to talk to them to see if that's something you can cover. But after the fact, there's not much you can do. All you can do is going forward to see how do you help yourself in case of another kind of disaster. And since we're in California, we've had the fires, now there's unprecedented rain and snow even for that matter. So who knows what's going to happen in the future. So I think that crop insurance is going to be personally as important as having car insurance if you're a farmer. I don't think you can take the chance and hope that you'll have a good year and nothing will happen.
Okay, awesome. Thank you. And we have another one here. It says, say a farmer expands the 4th year of production under the WFRP and microfarm policies would only consider the initial 3 years of revenue.
Well, when you would have the 3 years as your base, and then you'd be expanding. And there's some special rules. I mean, I'd have to look at the policy on expanded operations, but you would be allowed to expand. I can't give you an exact answer without knowing all the particulars and stuff. And that's where talking to an agent would come into play.
Okay.
But you would still have those 3 years, and then you would be expanding.
All right. And yeah, it looks like they were asking if those 3 years accounted for. Okay.
Yeah.
Another one we have is who do you need to talk to and register before February 28th? So in 2 days.
That's where you need to get a crop insurance agent. So I gave you the link told you where to go on the RMA website to look for a crop insurance agent. I really think the best thing to do personally is to talk to someone that you might know that's already a farmer and has crop insurance, and see who they're using. You can always change agents if you don't like them, but you have like 2 days in order to get covered.
Okay.
And also the thing you want to ask, so here's the thing too, when you call them, ask them, do they do whole farm and microfarm? Some agents don't, I don't know about you, but some people get really freaked out at dealing with taxes and stuff. And there's some agents that may say no. Now they're supposed to, and they're supposed to offer it, but but if they don't, I would ask that question. The very first question is that, do you service whole farm or microfarm policies? And if they say no, I would say, who does, who's in the area that does? And if you're still having trouble, please you could probably get all I can do is give you the link, but we've already given you the link. I can't lead you towards anyone. That's the problem. Even if I know of someone that's really good, I can't do that because that's showing preferential treatment.
Perfect. And I think also Amber shared the link in the chat too for
Good.
agent locator, but I'm going to reshare it here to everyone. Oops, that's your email. I also added your email there in case people need that. But yeah, Amber here has shared one, and y'all, she's been sharing some great links there. Same ones.
Thank you, Amber.
Yeah, Amber's on it. She's excited about insurance.
I can't do the PowerPoint and then do chats. Once I go to chats, I lose everyone.
And no worries. I think we have one more incoming question. Yes. Are there insurance policies for farmers with 0 years of experience?
you're starting out. I think, you know, if you have 0 years, that's where I would probably, if you've got a farm, you've just started up, I would, there are steps of what you can do. And I think FSA is where you would first start, is to go to FSA office and get registered, because you're just starting brand new. It really depends on what the crop is, because there are some crops for insurance purposes, like almonds, they're not insurable until they're in their, was it fourth to fifth leaf, you can get insurance. But that doesn't mean, but even then within Wholefarm, you could insure your almonds earlier, but you would still have to have 3 years, 3 years of tax records. So I would say go to Wholefarm, I mean to FSA. If you have a farm, go and talk to them. And we have a BFR group, Beginning Farmer Rancher group for California, that we meet once a month. Well, we meet every Monday it'll be starting up in March again, just for people to ask questions. And Victor Hernandez from NRCS is who is the champion for that. I'm on the team as well. If you're interested in that, then send me an email and I'll make sure I forward your email to him so you can get on the mailing list for that. And then once a month, we do a 1 hour presentation, and we have different speakers that come in from California. Some of them are from other agencies. Kath, you've been involved in that in the past.
Yeah, and I think Victor also has a webinar coming up, and I think they're also offering that in Spanish for the beginner farmer resources.
Yeah, that's
So,
it.
Yeah.
Yeah.
So we have, I know that the Spanish one is going on for sure, because I'm in charge of that track, but check your sched, and if you see it, sign up for it. And with that being said, our time is up. And Catherine, thank you so much for being so resourceful, for answering all those questions to the best of your ability, and just providing the space, because I know insurance right now in the times of chaos is just such an important thing that, many farmers are wondering about or worried about and are looking forward to understand more. So thank you so much for creating this space. We'd really, really appreciate you being here today.
Yeah, and I've tried to figure out how to show my face, but I'm not being successful.
No, you're good. I think also, yeah, I see. Yeah, you're all in dark, but anyone can look her up and go look at her profile.
Yeah, they showed you a picture of me. Sorry.
They did. We did somewhere. Well, thank you, Catherine, so much. And I hope to see you and everyone else in the other workshops that we have. I know we have one more for the end of today, but yeah, this conference is 5 days long. So I'm sure I will see many of you again. So take care. Thank you, Catherine.
And be safe, everyone.
Yes.